गर्व कर सकता है, दुनिया में हम आंख में आंख मिला करके बात कर सकते हैं। और ये मेरा साथ में हमेशा कहता है, आईटी प्लस आईटी इज इक्वल टू आईटी, इंफॉर्मेशन टेक्नोलॉजी प्लस इंडियन टैलेंट इज इक्वल टू इंडिया टुमारो।
A very good morning to all our viewers, and welcome back to day 3 of the second Elets BFSI Game Changer Summit. So far, we have had 2 successful days of insightful panel discussions and technology presentations, and we look forward to yet another exciting day ahead of us. Day 2 of the summit featured panel discussions on topics like changing BFSI regulation, AI, blockchain, cloud, and more, the challenges of securing zero trust networks. It also featured technology presentations from Mr. Jonathan Jackson, Director of Sales Engineering BlackBerry on using AI to prevent cyber attacks, Mr. Prabir Mishra, CEO Trust One on blockchain tech for all, Mr. Satya Gupta, CTO founder VeerSec on effective runtime protection, and Mr. Ajay Shenoy, Director Sales Compass on new age gamification tech for sales and finance teams. I would once again like to thank all our partners for sponsoring this event and for making this a grand success. Our presenting partner, AWS, powered by partner, Backbase, AI-driven cybersecurity partner, BlackBerry, digital cybersecurity partner, Inspira, security partner, Fortinet, SaaS technology partner, BMC, runtime application security partner, VeerSec, artificial intelligence partner Simplify, cybersecurity partner Tenable, maps and location partner MapMyIndia, associate partner Quality Kiosk, networking partner Neosoft Technologies, knowledge partner ScoreMe, emerging tech partner Trust One, and rewards partner Compass. So to all our viewers, stay tuned for some very insightful and power-packed panel discussions and technology presentations on day 3. We also have an awards and felicitation ceremony that will start at 3 p.m. So make sure you don't miss that. Also, please feel free to drop in your questions to the eminent panelists in the question and answer section, which can be found on the left-hand side of your screen. Now, to start off the first panel discussion for today, the topic for the panel discussion would be Millennials, a golden opportunity for FinTechs. So Millennials are the first generation that grew up with the internet boom, a generation that consists of 83 million digital natives and more. Is this tech-savvy segment an opportunity to expand for FinTech? Let our panelists decide the same. Our moderator for the session would be Mr. Madhusudan Ikambram, co-founder and chief executive officer, CreditBee, and co-founder Face. Mr. Mukesh Gupta, founder and chief executive officer, Monexo. Ms. Preeti Rati Gupta, founder, Lakshmi. Mr. Nirav Choksi, co-founder and chief executive officer, Credible. And Mr. Dipesh Karki, chief technology officer and co-founder, Lend & Club. Now, I would like to hand it over to Mr. Madhusudan Ikambram. to moderate the session.
Thanks, Aman, and thanks for Elets for providing this opportunity for having this panel with a very interesting topic. How FinTechs has been able to kind of impact the millennials, and what are the challenges, opportunities that we have with the millennials, and what kind of offerings that we have today. So that there's enough and more to be discussed. Just before I begin, probably a brief background about myself. I'm a co-founder, CEO of CreditB, which is a lending platform primarily, and now we are headed towards becoming a leading neobank in India. Apart from that, I have also co-founded FACE, which is a FinTech Association for Consumer Empowerment. It's an industry body. Today, there are a lot of FinTechs which have become part of that body, and we voice out the concerns or the suggestions about the FinTech world to the regulators and rest of the stakeholders. And that's about me. But I think 4 or 5 years back, when we all started this fintech journey, so all these panels used to be surrounded with one specific question: that is fintech a bubble, right? So I guess we have really moved forward a lot from those kind of questions, and lot of us. So including many great companies which are part of this panel, we have proven that this is not the question to be answered anymore. There's a significant progress that what the companies have done today. Fintech has evolved today, and therefore now what we are looking at is how we can impact the future course of banking systems in India. Is one thing. The second thing which was always there as a question was, are these fintechs a challenges to banks, or are banks are going to kind of learn from fintechs, and probably the fintech bubble is going to burst? I think the answer to that also is already found, that it's going to be a coexistence. Banks and fintechs are going to coexist, and that's the course of future. So having said that, so some of the very much in tune with the topic here. We have seen a lot of fintech funding. I think the recent news that is going around is there's a couple of $1 billion of funding that has happened in the H1, or the first half of 2021, within India, and that's a huge investments that has happened. So while that kind of a progress is happening here, what kind of opportunities, or what is the impact that fintechs are going to have with the millennials in India, is something good to understand from all of you. And so I start with Mr. Mukesh. Mukesh, would love to know your thoughts around what's the impact of. I mean, your company has been into personal lending place, as well as you guys have got P2P as one of the major platform which is used for lending. So how do you think that lending as such, or P2P as such, is going to change the course of how millennials are banking today?
Thank you, Madhusudan. So, as a founder of peer-to-peer lending company, we believe we are like an asset management company. We've seen the inflows into mutual fund as an asset class from 2000 till 2020, and that's become a 33 trillion industry right now. Peer-to-peer lending is a very sunrise industry, and most of us are now slowly focusing on different segments of the market. Some of the peer-to-peer lending are focused on SME, some are focused on payday loans, some are focused on personal loans, some are on durable loans. But the underlying asset which used to sit in the bank now is available to individuals to invest. Most of the assets can generate, as we know from an NBFC world, we are a 13 to 14% yield on an annualized basis. That's not available. And with the interest rate going down, fixed deposit now at 5%, for individual investors, individual savers, this is a new asset class they should look to diversify. Millennials currently are not savers. They are looking to get credit, right? They haven't reached a point where they have crossed the hump that their saving is much more. And we've seen in India, salaries haven't gone up as drastically as the cost of living has gone up. So a guy who comes from Meerut to Delhi or a Nagpur to Bombay is immediately thrown into a place where he needs to borrow. And as we all know, chicken and egg story is there, right? That question cannot be answered, but everybody needs to know that if you want to get credit, you have to take a loan. You have to build a credit score. So to build a credit score, you have to be somebody who has to give first money, and then you build a credit score, and then you get. And I think peer-to-peer lending will solve that problem in a large way, where banks or somebody may not want to take that risk initially.
Thanks, Mukesh. I think there was an interesting point that the millennials are not the savers like the how it used to happen in the past, and millennials are spending more. So therefore, there is a higher credit need, and fintechs are becoming one of the go-to portals or go-to businesses where they can borrow very easily. Was one of the thought what you brought forward. So just quickly moving to Preeti, I think you are on the totally other side of the problem here. While Mukesh is basically doing more of lending, I think you are building a practice for the people to kind of invest and save and achieve goals, right? And also the very special part about what you're doing is it is kind of it's more women oriented. Right, and that's a great work and an initiative at Lakshmi what you're doing. So how do you think that how you guys are impacting the millennials, and especially if you can speak a little bit about why women and why that is the focus at your company as well?
Thanks, Madhu. It's a pleasure to be here, and even more because I seem to be the only one on the other side of the fence. So here's what the numbers look like, right, in India. So you have about 3.7% of the total population that's investing, or that's investing into the equity markets, whereas the millennials form about 35% of our population today, right? So I think the challenge that exists, whether it is credit platforms, lending platforms, or investment platforms, it's essentially the penetration, right? And I think what has changed, especially when we talk about fintechs, is just the digitization, the availability, the democratization of everything that we sort of offered. I've been part of a very conventional investing, financial services business. And I think for us, a large part of the 20s were really focused on using technology to sort of cut costs, right? So it was bring the cost down for your customer. I think what's changed today is bringing a lot of innovation there, allowing the millennials to actually come onto the platform. I will come to the women piece in a bit, but I think what I see out there is, and to Mukesh's point, is that millennials also have a huge risk-taking ability as compared to the generation before. So even when they are spending, for them to buy a cryptocurrency or buy a stock is actually a way of spending. Because they look at it that way. They're like, okay, let me experiment, let me experience this, and then it's okay for me to lose some amount of money while I gain this experience. So I think just that mind shift, the paradigm shift of saying that yes, I'm okay to try new products, okay to use new platforms, is what I think all of us today at FinTech see hugely to our benefit. I would, in addition, also say that, because of the access of, the reach of the internet or the online platforms, I think people today, the millennials, actually expect hyper personalization. They expect the best platforms. They want the most intuitive ease. Their relationship is with the platform, not with the person, or, like financial services earlier used to be, right? It was your relationship with the banks. It was your relationship with your investment advisor. Today, it's your relationship with the platform. And I think that's what's very interesting. When we come to women, I think clearly, I absolutely relate to your question. This is a panel of all men, and I think all of you will ask me, or probably all of you have a question in your mind, why do you need a separate platform for women? And I think I connected back to the hyper personalization piece that I mentioned earlier. It is a no-brainer that women have been left behind in the financial services gamut, especially when it came to investments. I think when it came to lending credit, we've proved our worth, right? So I think all of you here will know that lending to women is always a good bet. But I think when it came to investments, women got left behind, way, way behind. And there were a lot of reasons: social orientation, maybe, just the financial services was male dominated, men speaking to men. And therefore, I don't think that entire communication ever went out to women. Also, the way women think about money is very, very different. So very goal oriented. I don't think we are risk averse. I always say we are very risk aware. So it takes us a longer time to build trust. And I think that is what Lakshmi aims to, that's the gap that Lakshmi aims to bridge. We are still a long way away in having specialized or customized products, financial products. But I think I see that happening as well. So, women are more inclined towards ESG investing, towards impact investing. And I think that will slowly happen. You will have customized products as well. But yeah, this is an exciting time. And I think all that you mentioned, Madhu, in terms of really being a completely, the fintechs as well as conventional businesses, banks existing, coexisting. But I think fintechs have made it very, very possible for a person sitting in a tier 2, tier 3, tier 4 city to get as much of personal service across the financial services gamut as a person sitting in a Mumbai or a Delhi or a Bangalore.
Great, Preeti. More power to you. I think you are really solving a unique problem in enabling these women to do the investments and achieve the specific goals what women carry. I think there is a specific need for customization or personalization, what you would call it. Again, good luck on that, and that's a very good initiative. So moving on, Nirav, I think while there is again a difference at your end that rest of all are B2C lenders and they are directly dealing with the end customers. I think where you are dealing is with the SMEs or the businesses, right? So let me also kind of little bit alter this question. I mean, you may choose to alter how millennials are getting the opportunities with the fintechs as well. While SME lending has been there for ages from the banking systems, so how a technology-led company like Credible is bringing the difference to an already existing SME lending world?
Madhu, I think it's a myth that SME lending is existing. I mean, there is a very, very small percentage of SMEs who have access to credit in this country. I love the fact that Preeti gave numbers, so let me follow suit. 75 million MSMEs in the country, approximately. Less than 16% have access to formal credit. So you're talking about a gap of close to $350 billion of credit which is not available. And the problem is, the problem is not whether banks are willing to lend to this SME ecosystem or not. The problems are multifold. One, first of all, are these SMEs creditworthy in the first place, right? So let's take a large percentage of this out, because they could be new businesses, they could be negative net worth businesses, whatever. But the ones that are left out, now you're talking about onboarding close to 20 million SMEs. And given the fact that, all our KYC processes, regulations today, it is impossible for a bank to be able to go out and do this. And which is where companies like us come in, right? Where we are able to digitize the entire journey, create an experience for the SME. And most of these SMEs, by the way, are managed and owned by millennials, right? So they are tech savvy in the first place. And, managing that entire digitization of the journey and the user experience and the customer experience, I think that is what differentiates fintechs today versus traditional incumbent players. But at the end of it all, right, you need someone to lend, and that's where the entire banking and financial ecosystem comes in. So I think it's a perfect match. It's a match made in heaven. As long as they are happy dispersing, and we are happy doing all the heavy lifting, I think it'll work.
Great, Nirav. I guess definitely it's a very untapped market. Although it looks like it's one of the loan segments what always banks had, but in terms of penetration, I think it's just they have skimmed the surface, and there is a much more opportunities for companies to kind of go deep. Thanks on that, Nirav. Moving on to Dipesh, I guess so. Lending Club has been there for 4-5 years in the industry, and even before the P2P regulations came, I think you guys had envisioned this thought of having a P2P lending, and then you guys went into getting the license and whatnot. So you have already established yourself as one of the among the leading the P2P lenders in India. So moving on that again, so how you guys are trying to differentiate, or what are the different offers you guys are thinking in future to provide to the millennials? And is the millennials the biggest focus, or you guys is just one part of your focus? You may kind of add certain color to that, would be helpful here.
Absolutely, Madhusudan. Thanks for question. So, see, when we started LinkedIn Club, right, the idea of bringing onboarding customers to LinkedIn Club to do completely virtual lending, completely virtual investment was something that not many could digest, not many could envision. Okay, this is something that's possible, right? Uh, Surprisingly, it was a group of millennials that started their pitch, right? That started this experiment. I think Preeti already mentioned that it's millennials who try to do these experiments, right? And that those are one of the ones that started the ride here, right? And those are the ones that have helped us build this entire industry to this date, right? Even in today's date, right? When I see our customer data, we see that more than 60% of our customers are majorly millennials, right? Apart from that, there are some new ones, maybe Gen Z or the older ones, right? But they are always at rest, right? They wish to try out something new, right? I ask is because they don't like things complicated, right? I mean, like Neerav mentioned, right, that there's a huge potential. Yeah, are you trying to ask me something?
Dipesh, I guess the network
Is
at
there a
your end
lag?
is a little patchy. Yeah, there is it's little patchy. So maybe if you can take off your video and try, so just give it a try. Yeah,
Okay.
probably it's a network issue. Yeah.
All right. Am I audible?
Yeah. Please go ahead.
All right. Yeah. So I was just from likely I mean a different set of
Hey,
so
Dipesh,
they
I'll
have
get
been
back to you
quite
again.
instrumental in
Dipesh, I'll get back to you again. Probably there is you're undergoing a little bit of a patchy network. So again, just moving on here, right? So the second thing what comes is the diversity what fintechs are bringing in. Let me explain what diversity is. What I'm thinking on. One is, so earlier we launched our companies as a vertical, as a single vertical, which would do the lending, or which would provide for investments, which would provide for a platform for insurances, a platform for loans, and whatnot, right? So that piece, what I call it as a vertical businesses, how everyone envisioned. But what we are recently seeing is all the other forms of fintechs, be payments, or be the wallet businesses, everyone is getting into lending, right? So that's a horizontal piece, right? So the horizontal way of forming the lending here. So is there a specific do you think that the future course of fintechs is in the vertical line of growth, or being as an horizontal player across multiple platforms, leveraging the current customer base what they have, and trying to lend, which is the new form of horizontal lending, is what I'm referring to. So what would be the future course according to you guys? If you can throw some color, it would be interesting to know. Why don't I start with Nirav this time?
Sure, Madhu. I think the reason most companies are getting into lending is because that's the only way they can make money. But jokes aside, I think look, customers today don't want to go to multiple platforms, right? To do different things. So within the framework of what you do as a fintech, whether it's lending, whether it's investments, they want a more horizontal, all-encompassing service offering or a product offering, and I think that is important. We see that a lot in the working capital space, and I think being horizontal, once you've built scale in particular verticals, right, is probably the right way to go. That's at least for us. That's the strategy, and we see a lot of customers benefiting from that because they then don't have to go to multiple platforms or multiple players to be able to get everything they need within the working capital space. So I think that's the way we look at it.
Sure. Hey, moving on to you, Mukesh. Is there an approach at your end, or is there a plan in next 1 year, 2 years in trying to make this vertical business taking on to an horizontal nature? Is that something you guys think, or do you think that there is enough to be done being a vertical business?
So, Madhu, very interesting question. We have two sides of the coin, right? We have people who are borrowing money and those who are giving us money. So, from giving us money point of view, if you look at AMCs, they have been only selling their mutual fund, right? They haven't gone and added insurance under that, right? There's no cross sell there. So we see that as remaining the way it is. But on the borrowing side, specifically millennials, they don't have affinity to a bank today. They don't want to go to a branch. They don't like the clunky internet banking. They don't want to go to 25 people to ask. They want to do DIY, right? I want to do it myself. It's okay. So there we do see an opportunity, and we will sort of foray into, and everybody's talking about neobank, digital bank. I do believe Singapore has got licenses. India will move into that space very, very soon. And we have seen people who have just done a digital play with either reward points or something. They've got into lending. So it is a cross-pollination which will happen. It's inevitable there.
Sure. I guess. Thanks, Mukesh. Deepesh, I guess you are back. Just you could finish on. Yeah. So just you could finish on what you're saying earlier. It was patchy. We couldn't get the overall point there. Yes.
Yeah, so I think I'll just keep it short. All I wanted to say was that, with the platforms like Lending Club and with innovations coming in and around different type of investment instrument, lending instruments, financial robo advisory, right? I mean, there are so many new instruments that have come in that have made the general finance more accessible and more simplified for the end users, right? So, of course, millennials being one of those experimental class are happy to adopt those, right? Today, if any of us in this chat room, right, just look into our mobile phones app, right, I'm sure that more than 50% of those apps are more towards fintech, right? So I think that's the level of adoption that we have, and I think this is simply going to grow further.
Great, Dipesh. Quickly moving on to Preeti on the topic that we are discussing, the vertical businesses versus horizontal businesses. I guess today, I may be wrong, but you can correct me. I guess today Lakshmi is more focused as a vertical business. So how do you think about this particular shift that what we are seeing in the recent industry by many other players?
So it's very interesting right now. If you look around, I think everybody is wanting to be, I mean, even Amazon wants to be in the financial services, right? So I think neobank is a word that is very commonly used. But the way each neobank or the to-be neobank explains itself and what it's going to do is very, very different, right? Whether you're going to do the entire gamut of saving to investing, are you going to do just the borrowing and lending and banking pieces? So it's very, very different for every, that whole neobank definition is very, very broad. So personally, I do think that people will look, a personal preference will always be to have one platform which allows you to do everything. I do think that until unless you are doing each of these things to benchmark to the best that anybody else is doing, you will have loyalty, you will have stickiness across. But if somebody is going to do even one piece better than you, customer stickiness or loyalty is not towards the platform, it is towards the experience, it is towards how the ease of transaction, ease and convenience. So I think an ideal situation is always to build the whole horizontal, build all the products. But I also think that there is the only way one can really then subsist is, sustain it, is to do it best. because going forward there will be, in each of these spaces, if you're focused on lending, you will obviously innovate and try and get the best solution possible, the best customer ease and convenience, cost, everything, right? So I think that the question will be whether you are doing just one thing really well or you can do all of these as well. I think it is to be seen whether the neo banks really, which means the entire gamut. I'm not just saying just the liability or the asset side. The ones that can do all of it together, will it really sustain? Is it doable over a long-term period, given the pace of innovation that we are seeing right now?
Sure.
I think what is great is you use the whole underlying analytics. You use, whatever is your machine learning algos help you across verticals. Just to give you an example, I use Amazon for a lot of things that I order, electronics, etc. But I will not use, Amazon for groceries, for example, because I know somebody does it better, far better, and more suited to my needs. So I think it's to be seen. I think both models will exist. It's really a question of what works. How you're able to build this to the expectation of your customers, really.
Got it. So neobank is the most commonly used or grossly misused term in the fintech domains today. So I think that's one point. And the second one is definitely both the models, both horizontal and vertical models, are going to exist, and that's going to define the future course. And we would see both the models existing even in future. I think that's a great point to conclude upon. None of our discussions goes without discussing about the entire COVID era, right? So let me kind of put this in a way that, so we have seen COVID wave one, right? So which kind of there was a lockdown and moratorium and whatnot. This was a March 2020. Then we had COVID wave two, right? So, and that which is kind of, we are opening up, we are just kind of back from the impacts of COVID wave two, and what currently the talks are is that there's going to be a COVID wave three, right? So now, how is it? How it has been different, right? So, wave one versus wave two, and are we prepared for wave three? How the impacts of these waves have been on our company's industry, and so are we in a better shape today to face wave three? Is something interesting to understand. So, why don't I start with Dipesh this time? Dipesh, quick thoughts on your experiences across these waves.
Absolutely. So, see, again, just looking back at millennials, right? They've not seen nothing like this in the last, I'm sure 20 to 30 years at least, right? If not less. It was a pure shocker when it came at first, right, in the early March. But then, again, since most of us are with this entrepreneurial mindset about, what do we do about it, right? So we took maybe a day or two to just, step back and think around it. And we started bringing innovations in and around it itself, right? Of course, I mean, while we were doing it, the government was thinking of something more in order to ensure that the economy does not shake up, right? Moratorium was one of such brilliant initiative that the government has taken then. And that did take part in the market, and it changed the way we started working. It changed the way we started reaching out to the customer. It changed the way how the customers used to come to the platform in order to access credit, or to do investments. Of course, there was a huge ups and downs in terms of capital inflow as well, right? However, I mean, it taught us quite well that although most of the people believe that this is one way of working, right? It introduced an entirely new style of working in the entire industry, right? A lot of industries also boomed quite well, and it gave birth to a lot new ideas, right? Such as remote working, right? Home-based cubicle, home office, a lot of things, right? So I think second wave was not as much scary compared to the first one. And when it comes to third wave, I think that's something that's under control. Condition we don't get COVID again, right? So yeah,
Sure,
that's pretty
sure,
much.
sure, Dipesh. Mukesh, if I want to understand, so how the impact was there, wave one versus wave two, and how prepared are we towards wave three?
On a lighter note, actually, wave one, most of us in our office were thinking it's a 10-day holiday. and we'll be back. Until every time the government kept increasing by 15 days to give you a hope that you can go back to office. But only after 15 days, it sunk in that, hey, it's going to be much longer. And I was in Singapore during SARS time, and it stopped there. It never came the big way COVID came to India. So it shows that maybe we are traveling much more from SARS days overseas, and we brought the disease along with us, and then it spread much widely and didn't come in control very easily. But I think a couple of issues are there, and different people have different challenges. Uh, some of people don't have enough space in their home. People living in Mumbai, living far off, the fact that they live in maybe 1 bedroom or 2 bedroom house, kids working, wife working, they working, television on with their grandparents or something, that's an issue, right? We have to acknowledge for them. Uh, the fact that consumers want to speak to you, but hey, sometimes the technology doesn't allow you to do. We had even, I think V5 maybe the paying 2x of the Wi-Fi charges, but still we sometimes have a patchy network. So it's a learning process for all of us. People are happy sometimes to work from home, but I feel I'm more productive personally when I meet people. I like to see things in person. So for me, I'm looking forward when I can travel back into Mumbai, travel back to Bangalore, and meet human face to face and do business.
Thanks, Mukesh. Moving to Nirav, the waves, wave one versus wave two, and what do you foresee the impact of wave three if it is touch wood that it never happens, but in case if it happens, how do you foresee the impacts towards the SME lending industry?
Right. I think so wave one was initially, there was this humongous scare, right, amongst corporates. So they started drawing down debt, and even if companies who were traditionally never borrowing drew down all the available limits that they had, and banks were very happy to do that because they preferred large corporate credit compared to SME credit. So what essentially that did was sucked capital completely away from the MSME SME segment, and that coupled with business slowing down and the lockdown really hurt. Uh, so there was a huge impact on the MSME and SME ecosystem. Then corporates started realizing that, look, if I don't take care of my dealers and my vendors, my supply chain is going to break and disintegrate forever. So there was this mad rush to start creating supply chain financing programs for these vendors, and to a certain extent that helped. By the time second wave came, right, I think all of this was anticipated. Banks again, started thinking like business as usual, although they were working from home, etc. So there was while it wasn't 100%, but we saw a lot of business returning back to normal from a financial services and lending perspective. I don't think wave three is going to happen, frankly. I mean, but even if it does, I think from a financial perspective and an economic perspective, I think people have kind of built that in or baked that in their thinking and the way they operate today. So I don't think there will be a major impact personally. And now I'm strictly talking about business. I mean, of course, from a health perspective and all of that, there could be. But I'm just saying from a business perspective, I think the ecosystem is very resilient now, and they've kind of baked that in. The only challenge I think we have is working from home. Like Mukesh said earlier, everyone said efficiencies are going up. People are able to spend more time with the family. Now, if I have to sit in front of the wall in front of my computer at home, I'll break my head on it, because you simply just can't spend. We've worked from home for almost a year and a half now, nearing 2 years. You can't do that ongoingly. So the third wave will impact people coming back to work, which is going to hurt social amalgamation of culture. It's going to affect retention. It's going to affect. So there is a lot of people are moving to other jobs because they want to be closer to their homes or whatever, right? So I think that's a big impact in my view.
Sure, definitely is. I mean, I guess the wave one, the impact on the people was way lower, as in the infection rates or fatalities in the wave one was very minuscule, but the kind of impact it had on the businesses was really on a significant effect. The wave two, on the other hand, had a significant impact on the health conditions of the people. The fatalities were very high, but somewhere the businesses had kind of gone through that drill earlier. So they had underwritten that the things are going to be back. We have seen the lockdown drills. So I think the impact on the businesses were very lower compared to wave one. Since we have already seen probably these two waves, wave three is something is not going to be as much a surprise to the businesses. Is something it's great to conclude on that one. Quickly, Preeti, you are on the other side of the business here. I think rest of all of them talked about they had a loan books, and they had the borrowers whom they had to deal with. Now, what was the impact of COVID on the investment sides? Did it go up? People did believe on investing more and saving, or even that dipped because they had to use this. There was a salary cuts, there was loss of jobs, so there wasn't enough of those extra income to basically invest and save. Anyways, I would like to know how people reacted on your platform.
Uh, so so I think the pandemic is a game changer for all of us, and particularly the millennials, because we are speaking about them right now on two factors. One is, I think, physical health, mental health, and the other is financial health. I think and the numbers again speak for themselves. I think over the last year and a half, we've had almost 12 to 13 million new investor accounts opened, and active investor accounts opened, and 60% of these are first-time investors. Right now, this is a very interesting fact given the background of the pandemic. But I think if you look at just all the the facts that really are in front of us. So there is obviously the uncertainty. We began with the uncertainty. The markets really tanked when the COVID broke out in India, and then suddenly you saw within the next few months, ramping up. You had 40% returns, 50% returns. So I think in people's mind, there was this uncertainty. I think there was a question mark on how they had so far done their financial planning. Have they really saved for this sort of an uncertainty, or, if for any calamity? Low interest rates, again, forced people to say, okay, can I look beyond just saving my money in bank accounts or fixed deposits? So I think all of these have really been a game changer for the financial services industry. And it's out there to see, right? The other big factor is all this liquidity that's coming into the market. You may call it froth, you may call it just something that may not last for a long time, but right now it is there. You're seeing returns in double digits across the board. And I think people have the mind space. They've had the mind space over the pandemic to understand, read, go to these platforms. So I think we have overall, for the financial services, for investments, it's been a great time in terms of getting interest and getting deeper penetration. And of course, I think a lot of us fintechs can take some credit on that. I think especially when it comes to women, it's been a very interesting phase, because I think it has the same factors have influenced women to sort of say, I want to take charge. We've seen we've heard of several millions of people really saying, okay, the bread earner was lost in the pandemic and the woman didn't know how to manage her finances. I think it's been an eye-opener. I think women have really realized the need to understand their financial planning, their money management. And I think over the last 1.5 years, we've at least spoken to almost 80,000 women. We've done financial fitness boot camps, which just tells you the desire now to know more, to participate. So I think in all ways, this has been a game changer, and for the better when it comes to investing money. I think the only one piece, what I really am wary about is that this should really be a time when everybody who's coming to the market should take a step back and look at it a little bit more pragmatically.
Sure.
I think it'll be important to see when the pandemic ends, when the liquidity flow ends. Markets will pan out differently, may pan out differently, and are you really keeping that in mind while you're putting your money in? So I think there is a pre-pandemic, there is a post-pandemic, and then there will be another post-pandemic time when I think people will really sort of look at this hopefully more pragmatically. But yeah, I think it's been great for all fintechs of technology platforms to be able to reach people who really needed the the service, whether it's lending, borrowing, or investing.
Great, Preeti. Thanks on that. And so while banking is a very regulated industry, right? So there are the regulations on fintechs, on how the fintechs are how the fintechs are conducting their businesses today. The regulations around that is evolving. So it has not reached the stable state yet. Because there's a lot of dynamics that are happening in the market, and we are seeing that the many bills are coming into play. For example, the recent bill, what would be under discussion is the data security and data privacy bills. So how do you guys have seen these regulatory changes impact your businesses? Were you able to model your businesses accordingly, and was the impact anytime had any kind of fatal eventualities to your business models or anything of that sort? Would be great to know from you in first hand. So I would start with Nirav.
I don't think I don't think that there have been any adverse regulations. I think for the fintech industry at least, and I think that in fact, I'm if you think about all the positive things that the government has done in terms of simple examples like OCEN coming in, CKYC, all of these initiatives that they are doing to kind of make the borrower journey easier and lending available to the MSME segment. I think it's very, very heartening to see such regulations come in. Now, we are also an NBFC, so obviously we are heavily regulated from an RBI perspective, but most fintech platforms are not, right? And the only, I think, and there are the right regulations coming in terms of data protection, data privacy. You heard recently about data being hacked for large fintech platforms. And I think the way some of these platforms are, some of the lending platforms have been behaving with customers, especially on the collection side. I think there needs to be regulation around that. There needs to be like banks are regulated and like NBFCs are regulated. Platforms should be regulated as well, which hurt the customer experience and hurt the overall industry. So I don't think there have been any adverse regulations. I think most of them have been very, very pro fintech. And very, very pro SME, MSME. And I'm hoping it continues that way.
Got it. Thanks, Nirav. Mukesh, so there has been a lot of dynamics in the P2P industry as well, including the entire P2P guidelines and recognition of P2P as an NBFC and whatnot. So what was your experience? How was your experience with the regulations that came along your way of conducting the businesses?
So I think Indian regulators are way ahead of and very open to allowing fintechs to come to India. And if you look at our UPI, our NEFT being 24/7, I can, with my experience across Southeast Asia and in US, I haven't seen this kind of a banking change which has happened in last 10 years here. So we are far ahead. The only surprise for us as a P2P lender was the RBI putting a cap of 10 lakh rupee, and after almost a year, allowing us to go to 50, which has never happened. It's like I only have one reason to tell. I keep going back to RBI. Government says smoking is injurious to health. It doesn't say you can smoke only 2 cigarettes a day, right? That's people lose money in stock market, but stock market people put money in billions of dollars, right? So I find that ridiculous, and there's no other way to describe that world. And I think the rules and regulations are different. Like a lot of unlicensed fintechs are running around amok in country, and we are regulated and we are like shackled with chains out here. So that's where my pet grief with the regulator is right now.
I hope
And if there is
that
any
changes
regulator,
for you, Mukesh, soon. So let's hope for it. What is your thoughts around this aspect, Deepesh? Since you're also on the similar business, right, of P2P lending.
That was a clever move, huh, Madhu? All right. So I
Okay.
think for such novice industries like P2P industry, right, wherein, I mean, it has not created a good rapport in the international market. I'm really thankful to the regulators, Indian regulators, who have quite carefully evaluated how the regulation should be and how it should not be, right? So I think with the introduction of regulation and with us being certified by the RBI, as a NBFC P2P, it has simply empowered us to reach out to the Indian customer set, right? It becomes more simplified for us to tell them this is what we are doing, and I think this is simply
Sure.
bound to grow, right? With more and more exposure, with more and
It's
more
an
performance
evolving
evaluation.
regime. Yeah, it's
Correct.
an
So
evolving
with
regime, and we hope for.
absolutely.
Got it.
And
Got it.
if a selected 5 to 10 P2P industry startups prove their value, then I'm sure RBI will be open to reevaluate their regulations and will give a better leverage to the entire industry.
Got it, Deepesh. Preeti, so is there a way that you are bound with any of the regulations, or you are yet to see regulations trying to come and put a guidelines on the business of investment platform that you would be doing it? So happy to know a little bit around that.
No, I think we are very, very tightly regulated. As you know, SEBI is one of the most, sort of overarching big brother to essentially the entire investment world, and I think, and rightly so, because I truly believe in any space. I think regulation give you sanctity. Especially in this dynamic world where you have innovation happening so quickly, newer forms of being able to give out the same service. I think it's important to sort of, I mean, look at cryptocurrency for example, right? I think it is important to have a regulatory environment around it while we are allowing a lot of the platforms to come up, right? I think my only point here is that regulatory mechanism or regulators have in India been very, very agile. I also believe that given this whole digital, the new age sort of way of interacting with financial products, I think they need to be very, very adaptable as well, and quickly so. I think the speed here is very critical. I think what happened over the last few years or last many years was, it sort of took them time to understand, and they would sit, form the regulation. Meanwhile, a lot would happen. I think right now with that speed, maybe that adaptability and agility is would be far more needed. I think they need to really sort of enhance that, only so that a lot of the people who are doing good business, who have risk management in place, actually get that sanctity, and it allows the sort of foul players to then fall off, because that's what lends industries across, right, a bad name. So you need to have regulation. I think it's great to have regulatory mechanisms, but I think they need to be agile, adaptable. I think in terms of data privacy and protection, I think it is something that again, I come back to millennials, right? Millennials are very, very particular about this, and I think it's important for all of us. It's very important for that regulation to be there, for us to be aware, for the user to be aware as well.
Got it.
So yeah, I think regulatory environment is good, and in India, I think we are particularly. I remember when I was doing, this is 15 years back, I was doing commodity futures, and I had a French bank come and visit us, and they said, "Oh, we want to check whether you are compliant, etc., etc." And when she came here, she was like, "Oh my God, like India has a regulatory mechanism which is far, far more stringent than what we have back home." So I think we've always been top notch. It's great to have them even more agile and adaptable now.
Sure. Thanks, Preeti, on that. I think let's just keeping a tab on the time. It was a great conversations what we had. We'll just go to each one of you on a a quick 30-second closing remarks on various topics what we dealt. Please let me start with Nirav.
Thank you, Madhu. I think you did a super job. So thank you for doing this really well. I think, in summary, we spoke about millennials being a part of every ecosystem that all of us are involved in. We spoke about how customer experience is the number one priority, and not loyalty towards the platform or not loyalty towards the person. And I think that's going to become even more important going forward. So if we want to really address this millennial base, and we don't have a choice but to do it, right? We need to focus on that more and more, and I think that's really going to be the game changer.
Thanks, Nirav. Preeti, if you could go next, and let's do a quick 30-second closing remark.
Absolutely. So I think post this discussion, we all agree fintechs are the way to go for millennials. I think there is no option. I see even traditional conventional businesses now being, driven by tech. So in some way becoming fintechs themselves. I think, my stance is always that women will increasingly form a larger component and percentage of the user of, as users of fintechs. And I think I see exciting times ahead. I think speaking to all of you here, hearing you, I just feel that we are here. I think in India will actually become this one place where there'll be a lot of innovation because we are customizing to the end user. So bright future ahead. And thank you, Madhu, for doing this really well.
Thank you, Preeti. Dipesh, why don't you go next?
Yeah. So I think, with the millennials who are always seeking for convenience, right? Fast, safety, security, and various mode of to transact, right? With more and more AI, IoT-based devices coming in, apart from the general screen-based interactions, right? I'm sure with these type of convenience in place, fintechs are definitely going to boom a lot, and there's going to be huge adoption amongst the millennials in order to uplift it to the next level.
Great, Dipesh. Mukesh, one closing remark from your end.
Just one line. Abhi to party shuru hui hai.
That's a great way to conclude. Hey, thank you, folks. It was wonderful. A lot of insights, a lot of thoughts. We got to discuss. Thanks for Elets for providing this platform for all of us in putting forward all our thoughts. Thank you all. Thanks a lot.
Thank you.
Thank you. I'd
Thanks,
once
everyone.
again like to thank all our panelists for this wonderful discussion on the opportunity that fintechs have to expand with respect to millennials. Now I'd like to provide all our panelists with a small token of our appreciation on behalf of Elets Technomedia, starting with Mr. Madhusudan Ekambram, co-founder and chief executive officer, CreditBee, and co-founder Face. Thank you, Mr. Madhusudan.
Thanks a lot. It's an honor.
Thank you. Mr. Mukesh Bubna, founder and CEO, Monexo.
Thank you.
Thank you, Mr. Bubna. Miss Preeti Rathi Gupta, founder Lakshmi. Thank you, Miss Preeti Rathi.
Thank you.
Mr. Nirav Choksi, co-founder and CEO, Credible. Thank you, Mr. Choksi.
Thank you so much.
And Mr. Dipesh Karki, Chief Technology Officer and co-founder, Lending Club. Thank you, Mr. Karki.
Thank you.
Thank you. I'd once again like to thank all our panelists, and with this we conclude our first panel discussion for the day. Moving on, we now have our next set of presentation. So we will be back with that shortly. Thank you.